JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 22nd of September 2020. So yeah, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, given that the world is now again worrying about the next possible lockdown, having a look at this picture here, we can see that so far the numbers have been okay-ish, I would say, because again it depends to what we are comparing it to. So if we're comparing to these recent peaks, then yes, I mean we can see that there is a bit of a slide here. However, as I mentioned to you previously, if we let's say applied somewhat of a technical analysis here, I mean either we could see here a bit of a range here with some overshoots, or a slightly tilted to the upside rising channel. But I mean hopefully that's a range. Of course it depends, you know, everybody sees what they want to see. So but yeah, the most important is that this number would be declining again. However, like I said, there are fresh concerns that possible lockdowns, a new possible lockdown could be back on a table. I mean, it never left the table, but now it's becoming a bit of a more realistic thing. Now, jumping into the charts, this is what I'm leading to. Basically, the equity markets got sold off yesterday. And looking at, for example, here in the Shanghai Composite, you can see that initially it tried to move higher. The index did try to move higher, but it drifted back down, and also not only failed to move back above this 3,336 zone, but also moved back below this 21-day EMA shown as the yellow line, which kind of creates a bit of a bearish atmosphere. However, if we look at this one from the very short-term perspective, we're still trading above this little short-term upside support line taken from the low of the 11th of September. So in a way, as long as it remains intact, then yes, still there is a possibility for this index to drift higher. However, as I mentioned to you previously, to get a little bit more comfortable with higher levels, preferably a push above the 3,336 territory would be needed, guys. So that's why for now, probably be very careful, probably remain a little bit on maybe on the neutral side, and wait for that confirmation move. Nikkei is closed today, so that's why I'm gonna jump into Hang Seng, Hong Kong's Hang Seng, and this is what I was talking about yesterday, basically when I was covering Hang Seng again as well. And when I was saying that if we get a nice good drop below this 24,150 territory, then yes, further declines are possible. The next target could be this 23,685 zone, which, as you can see, kind of we almost got a test of it, got a perfect test of that area. That's the low, the 15th of June. But if the selling continues, then yep, well, further declines here are possible, and that's where we're going to aim for the 23,090 territory, marked by this little swing high here of the 29th of May. Of course, below that we do have a much other better areas of support, like for example this one here, the low of the 28th of May and the low of the 25th of May. But let's keep it short and simple for now. Let's not overdo it. And like I said, if we get a further decline below this 23,685 zone, then the next little target could be here near the 23,090 zone. So keep your eyes on that one. Now the German DAX. Now look at this beautiful move. I mean, look at this rising wedge pattern, which worked out nicely according to the to all the TA rules. Now for the past 2 weeks I kept talking about this idea, guys, and if you were following me, basically what I was saying, that first of all, if you're looking for some higher levels, then wait for a break back above this 13,314 zone. As you can see, it never happened. Instead, the index drifted lower. But then what I was saying, that if this area here, the lower side of the rising wedge, does provide support, then we could see something like this, a rebound and a push higher. But we got a strong, first of all, we got a gap to the downside, opening gap to the downside, which also kind of was fueled by further selling. And this is exactly what I was talking about, that if we get a break of this lower side of the rising wedge, then yes, this is when we will kind of stick to that idea, seeing kind of more downside. And the next targets here could be those 12,754 zone or the 12,634 territory right here. And also around here we'll aim for this 100-day EMA shown as a green line. And well, basically all that worked out nicely. Now the next target here for me is this 12,254 territory. Now of course, for that we need to see a nice good further move below this 100-day EMA. And if I look at the cash index and where it's currently sitting at, we can see that the price is currently near the 12,605 zone. So basically it's just, it had rebounded somewhat, however not much, and it's still but it still remains above this 100 EMA here, shown as the green line. So basically it's somewhere sitting somewhere around here right now. So in other words, keep your eyes on this 100-day EMA. If we get a nice good drop again below it, then yep, the next target here will be this 200-day EMA shown as the black line near the 12,310 zone, somewhere around here, or this low of the 30th of July near the 12,254 territory. So keep your eyes on that one. Now gold, and gold was well, yesterday in the morning I was telling you guys, wait for that confirmation break, either through this upper side of the symmetrical triangle or through the lower side of it. And yep, you can see we had a strong move lower here. It broke this it broke the lower side, it drifted further south, managed to move also below the 1901 territory that I kept talking about for the past kind of couple of weeks. And but as you can see, the bulls were still able to lift this one back above this area, back above the 1901 zone. So that's why we're going to keep an eye on it carefully. And if we get another drop below it, then well, I mean, the next target here for us could be this the low of the 12th of August, or in other words, the lowest point of August near the 1863 territory. Slightly below that, we do have the 108-day EMA here shown as the green line. So again, good potential targets here, but wait for that confirmation break below this 1901 territory. In terms of the upside, now with the upside, of course, ideally a push back above this 1972 territory could be ideal, but basically because we can get rid of this lower side of the triangle and only keep this downside line here taken from the high of the 18th of August, now we can keep an eye on it and basically wait for a break of this downside line, and then we could maybe consider some higher levels. Now of course you could draw this one right here as well if you're a bit more impatient, I would say, but nevertheless, if we get a break of this downside line taken from the high of the 7th of August, then still there could be this obstacle here, which is this downside line. So that's why probably wait for a break, well, wait for a break of both, and then we could consider higher levels again. For now that's the case, because to be honest, the more we're gonna move maybe either lower or sideways, this might change. So I'll still review this again, but at the moment, at this point in time, yes, that's the kind of game plan. Silver also had a strong move lower, and everything kind of is still working out according to the plan. Last week I've mentioned silver, and basically I was saying that in order to aim for lower levels, we needed to see a drop below this 26.05 level. And as you look at this beautiful move, the commodity drifted lower, found some support near this low of the 11th of August, near the 24.40 territory, and is currently sitting here. But if we get a further move below this again, then yes, we will aim for this upside support line taken from the low of the 18th of March. And as you probably understand now, if we see this move lower here, and if this upside line stays intact, this whole move could be seen as a corrective one. DXY. Of course, one of the reasons for everything, for commodities falling like that, was the rising dollar, increasing dollar, and the dollar acted as a safe haven here, and yep, everybody was starting to jump into the greenback, and against all other currencies. I'll jump into a few in a while, but here basically, if you remember, last week and a week before, I mean, basically I kept talking about this little area right here between these two highlighted levels. So in a way, in order to aim for some higher levels here, or then yep, we need to see a push above this 93.81 zone. And for now, yes, we're on the right track. Yesterday the index did drift very close to it, actually almost tested it, almost tested it, and then kind of drifted back down. So if we get a nice push again here to the upside, then our next target here could be near the lowest point of March of this year, near the 94.65 zone. Around here we also have this downside line taken from the high of the 23rd of March, which also could provide resistance. So in other words, if this downside line remains intact, still this move higher could be seen as a temporary correction, guys. So that's why for now, let's keep it short and simple. You can see that we do have our oscillators also moving higher, so kind of supporting the idea here of a possible further move north, but be very careful near this downside line and near the lowest point of March, near around the 94.65 zone. Bitcoin, quick update here. To be honest, I mean, the same story, but it's currently sitting at this key support zone. To be honest, it's a little bit of a messy chart. Now let me just clear up this and start fresh probably. So first of all, of course, the fact that we managed to break this upside support line taken from the low of the 13th of March, that's of course, yes, great news for the sellers, but you can see that recently the crypto kind of failed to move above this area, above this 11,137 zone, which is marked by the low of the 25th of August. Now let's just kind of double check something here. Yeah. So yeah, so this area here, we can actually put it as 11,150, just to be honest, a little bit on the safe side. So it failed to move above this area and started drifting lower. Yesterday we saw this good sell-off here, where the price kind of ended up being near this 100 EMA, shown as the green line. So of course, all this kind of bearishness is still kind of putting the downside scenario, or should I say keeping the downside scenario on the table. The next target here could be this 9,882 zone, which is not far from the 200-day EMA. It's a very good level here, marked by the current lowest point of September. Now that's what we could be targeting, and if we're looking for something short term, then yes, keep your eyes on yesterday's low, which is around the 10,321 zone. A drop below this would confirm a forthcoming lower low, and then we could start targeting this current lowest point of September near the 9,882 zone. And in terms of the upside, well, it's pretty straightforward. Basically, we need to see a push back above this 11,150 territory, somewhere around here, and then yes, higher levels could be met again. Now, jumping into AUD/USD. So here, as I said before, yep, the dollar, US dollar strengthened and brought the Australian dollar to the downside. Now, it broke this upside support line. It was a tentative one, but nevertheless, I kept it on the chart just for the sake of it. We can get rid of it now, and now it's creating this slightly more bearish atmosphere. You can see that the pair is getting a hold up near this low, the low of 9th of September, which is around the 0.7192 territory right here. So in other words, you can keep an eye on this level. A nice good drop below it could, yep, open the door towards the 0.7136 territory, or we could start looking at these. You see, we do have a bunch of good support levels here, so we could start looking at one of them, maybe this one here, the 0.76 territory, or it could even be this one right here, probably the more better one, the 0.7064 mark right here, marked by the high of the 10th of June, which is also the highest point of June, and also marks the low of the 24th of July. So again, for now, let's probably keep it short and simple. Let's aim for that area, but we need that confirmation drop below the 0.7192 territory first. Now, in terms of the upside, here you can see that ideally we would prefer to see maybe a move back above the 0.7345 level and then aim for higher levels. Until then, it's a bit, it could be still tricky. It could be oscillating here around this 21-day EMA, and basically could be just moving sideways. So that's why preferably maybe a push back above this 0.7345 level could do the trick for more buyers. And let me just quickly put this one on the chart like this. There we go. USD/JPY. So I talked about this one yesterday, and yesterday in my morning video and my traders tea time, then after I told you guys to keep an eye on this level right here, the lowest point of July, near the 104.19, because what I was saying that if the bears struggle to kind of keep the candle here, the body of the candle below this area, then we could see a nice reversal here and a push higher. Here we have in a way kind of a battle between the two safe havens here at the moment. So that's why we're going to be very careful with this one. Probably if we see a move back above the 105.30 zone right here, then yes, could consider maybe a bit of a move higher, but in order to consider the downside, probably we'll wait for a move below the 104.19 zone and then aim for the downside again. Until then, all this area could be a bit of a tricky one, so we'll remain slightly on the neutral side on this area right here. USD CAD, so beautiful move, and everything's working out nicely here. So I talked about this this pair yesterday, and I kept talking about this one for actually for a few videos in my few videos, where I was saying that if this 1.3240 territory breaks, then yep, it could open the door for a bit of a larger correction to the upside, because don't forget we're still trading below this downside line taken from the high of the 31st of March. So to be honest, I've looked at this pair yesterday. You can review the video as well there, and because not much has changed, it's still the same idea. We're aiming for some higher levels here up until these EMAs, or this 1.3460 zone, or as I said, this downside line, which could provide a bit of more resistance. So for now, guys, yep, keep your eyes on this scenario. GBP/USD also, so if the dollar continues to strengthen today, then yep, this pair, we can expect this pair to move further south here. Now, given the good move that we already had here, what I'm going to do here is, first of all, let's get rid of this highlighted area. Yes, we've reached this level. But I'm going to keep an eye on this low, the 11th of September, which is also the current lowest point of September, and that's around the 1.2763 territory right here. And if we want to look at some further declines, then yep, wait for a confirmation break below this, because at the same time the rate would be placed below the 200-day EMA, and maybe more sellers could be joining in here, potentially driving this one towards the this upside support line taken from the low of the 18th of May. And if you want to look at some higher levels, then probably for now at the moment wait for a break back above this 1.30 territory, the psychological 1.30 zone, and then we could consider some higher levels. But again, for it at the moment, it's looking at this daily picture, it is a little bit tricky for the bulls. But for the bears, it could present itself with a nice opportunity if the pair drops below this 1.2763 zone. Euro Turkish lira. Now, this one, I haven't looked at this one for a while, but recently kind of well, for a while. Last week I talked about this pair, and basically what I was saying there is that if this little short-term tentative upside line gets broken, then yes, we could consider lower areas, but we would consider lower areas if we get a drop below this little level right here. This is 8.8226 zone. However, as you can see, we didn't get even the daily candle remaining below this area, and yep, it reversed back to the upside. And as I've mentioned before, when I was covering this one recently, I was saying that the target here could be that psychological 9 level. First of all, let me get rid of this upside line. So yeah, and as you can see, the pair is yesterday, for example, it moved very close, but failed to reach that psychological 9 zone, and then drifted back down today. This morning it came close again, but for now it's kind of sitting here. So that's why for now we're waiting here. We want to see if actually that psychological 9 level will be hit, or actually will it continue moving further north, and if so, then well, I mean, then it puts the beautiful number of 10 on the table. But again, that's too early to talk about that. First, let's see how it's going to behave near that psychological 9 zone. And finally, EURUSD. So yesterday we had a drop below this 1.1753 territory. I talked about this, and basically what I was saying, that we need to see a nice good drop below this area, strong move below this area in order to aim for lower levels. We did get a break, but as you can see, the body of the daily this daily candle remained above this area. Today we're seeing a nice good attempt to break this again, and we are breaking it. So let's see if the candle can stay below this areas again. If it can, then yep, we'll start looking at some levels here, for example, like the 1.1696 zone, or this 1.1570 territory, which probably by the time this pair could travel lower might coincide with the 100-day EMA here. But again, like I said, keep your eyes on this pair, especially if the US dollar continues to strengthen today as well. So yep, and then yep, we could consider further declines. Initially we could target this 1.1696 territory, as I mentioned before, and then we'll take it from there, guys. So I really hope you found it useful. Thank you very much for watching and listening, guys. I really appreciate your time, so that means a lot to me. I hope you found it useful, and if you want to catch my video later on, my trader's tea time, as always, 13:15 GMT. For now, guys, I hope you have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.